A stock of the day, though, thought we'd take a look at Westpac. Of course, they put out first half cash profit, came in above expectations despite falling 12% from a year ago. Westpac also recording an impairment charge, $139 million, as the bank sets aside provisions for bad debts amid weather-related risks as well as broader global uncertainty. Net interest margins fell by 15 basis points in the first half for an income of $8 billion. Looking ahead, bit of a clouded forecast, forecasting low expenses for the second half of the year. Margins, though, continue to be squeezed by record low interest rates. Like its peers, it's being hit by competition and a consumer shift to fixed rate home loans, because basically the big four banks are home lenders and not much else. What do you think of the Westpac update? Does it change your view on the big four banks, Mathan?
No, not really.
2.5%.
Yeah,
right?
I mean, look, there'll be a fair bit of macro shorts in the banks. So you on the results, you'll get the short covering. Most of the banks over the last 15 to 18 months have pretty much traded sideways. So you're not getting anything more or less. Look, they've been holding up well. The Aussie market has outperformed, and the two key indicators for me for the banks are you're looking at what's happening in the global banks, because our banks inevitably will trade with global banks.
Yep.
And the second one is what's happening in the currency, because the biggest traders are international traders, and they're looking at the currency effect. So they want to get Aussie market exposure. They don't just buy miners, because they can buy the banks because they're much more liquid, just like the big miners, and they get the currency, they get the commodity play through the currency. So when the currency starts to roll over, banks get into trouble as well. For me, where we are in the currency trade, it's starting to look a bit dicey. We had that bounce on the rate hike, and then the Fed moved, and it's come back as I expected. RBA moved because the Fed told them, we're going to move, boys. You better start playing catch up. So I think there's a risk in that. Now, as you said, all the banks have now become a mortgage play. They've done well on the cost, but they've got a problem where margins are declining. Bad debts, they've been writing it down. Everyone is basically looking for the first bank to start putting up the bad debt provisions. That's the worry. So I think you've had the run, you've done well. It hasn't done much in the last 18 months. You picked up good dividends. Don't get carried away. Look at the cycle. I think you can see what's happening in the property market. You know what the rates are doing. That's your customer base. You're going to see weaker growth.
Okay. So if you've been a long-term holder, would you?
Yes, this is where the trick.
Sell into the.
Everyone will be telling you, and the first thing I get told, and this has happened to me for decades, that tax, I can't sell because they've held it for so long.
Yeah.
And that makes sense. And I would say where you got to balance out your risk is if you're sitting in something like a bank and you've held it for so long, sell a bit of that. And this is where I go completely the other side. Go buy something like CSL.
Right.
It negates your risk.
Right.
Because one does well on lower currency, the other one doesn't do well in currency. And that's a high quality, steady, long-term play. You're not going to get blown away, and it balances out your portfolio better.
Okay. We don't own any banks. Zero, which is extraordinary when you think we've got.
And no interest in.
And you're right. My body language probably betrays me. Zero interest in it either. I think it's the only investment case I can come up with for owning banks at these prices is that if you're one of these individuals on a zero tax rate, and you can extort the rules, the franking credit, which is just. We'll leave that there. I've got in trouble for this in the past, but we'll leave that there. But if you can do
I do think it's a disgrace.
It is. I think so, yeah.
Right. But we're paying for it.
We are. Yeah, and our children are going to pay even more for it.
Yep.
But regardless, if you can do that, then there's a case for holding these things. But otherwise, I would much rather own a CSL. There is now starting to become a whole ocean of opportunity in the market.
Yes.
This should be a funding source. Tax... I get it, but
it's tough.
It's tough. That's a decision for the individual, but there are much better options around, and you should start selling these and buying those.